Hello everyone, this is Omar for the Market Zone, and this is a new trade analysis video. In this video I'm going to review with you a trade idea that I shared with my lead zone members this week, a trade idea on USD Yen, a trade idea that generated about 180 pips profit for us. Highly profitable trade, especially in a week that we didn't have much trades on with all the low liquidity summer markets. So I'm very pleased with the result, and I want to share with you all the technical details for this setup, so you'll learn from it and you'll understand why I chose to buy USD Yen before and during Yellen's Jackson Hole speech. So stay tuned and you'll find all you need to know in this video. Before I dive into today's analysis, I just want to thank you all for watching this video and sharing the Market Zone content online. And I would also want to ask you guys to continue to do so by sharing this video as well throughout social media. Show your support and also help others discover the Market Zone and benefit from the trading edge and the kind of educational content that I'm providing in this video and others. So thank you very much, and now let's dive into the charts and see today's trade analysis on USD Yen. This is USD Yen, this is the daily chart, and this was the chart that was sent to the lead zone members as part of our weekly trading plan as a potential bullish trading scenario for USD Yen. This is the trading software I'm using, not the charting software, but as you can see we had a support zone near 100, and later on we will see the details on TradingView. The result was this huge rally following Yellen's Jackson Hole speech that generated about 180 pips profit. So very nice trade and perhaps a daily reversal on USD Yen. So I just want to show you guys how it looks on the weekly trading plan that was sent to the lead zone members and the result. And now let's see the details on TradingView. I would like to start my analysis by reviewing the weekly chart of the USD Yen on the TradingView platform. If you aren't familiar with TradingView, just check out tradingview.com. Great tool to use, great charting software, and also a great place to follow successful traders and investors. If you want to follow me on TradingView and see my free stuff there, just look for the Market Zone on TradingView and check out all my charts, my updates, and connect with me on TradingView. I already marked a couple of things that I want you to pay attention to on the weekly chart. The first thing is the weekly downtrend line that you can see right here, that the price broke out from during 2015, and then later on, following this weekly head and shoulders pattern and the sharp decline that we've seen on USD Yen, the price reached all the way to retest this broken weekly downtrend line and bounce from it, and we will mention it later in this video. The second line is this weekly uptrend line that was broken during the first part of 2016, and that accelerated the decline of USD Yen towards the 100 support zone, and that's actually the third zone I want you to pay attention to. It's the 100 psychological level, and also a weekly support zone that acted as support once the price tested it. So that's the weekly chart, and that's the main things that I wanted you to pay attention to before we'll dive into the daily chart. When we zoom into the daily chart, we see a couple of things that made me want to look for bullish opportunities this week on USD Yen. And the first thing is the initial price reaction when the price spiked into the 100 support zone, tested the broken weekly downtrend line that I mentioned on the weekly chart. The broken downtrend line was supposed to act as support now, and in fact it was a support along with the 100 psychological level. The price spiked higher, nice bullish reaction followed by a double bottom. This is actually a scenario that we've traded in the lead zone not too long ago, and then the result was a 600 pips rally that brought USD Yen all the way up to the 50 days moving average. A little side note about moving averages and the 50 days moving average specifically. The 50 days moving average is definitely a line that you want to pay attention to, especially in strong trends like the current downtrend that we have in USD Yen. In our case, it should have acted as resistance line, and that's exactly what it did. That is why I marked it as potential target zone and final target zone for our bullish setup here, the double bottom scenario, and I advised the elite zone members to take out profits before the price will reach the 50 days moving average. Even those who tried to maybe catch a breakout or extended rally in USD/yen, or thought that USD/yen have the ability to continue all the way up to the 200 days moving average, got a huge warning signal when we got bearish outside bar. As you can see, the blue bar covering the white bar here, a bearish outside bar that generated a reversal in USD/yen and a retest of the 100 support zone. This is a great example of why I'm using moving averages and why I think you should include them as part of your analysis. Although they are very simple and sometimes underestimated, they are very powerful, and I also wrote an article about how I use them as part of my trading. If you want to read this article, I will put a link in the show notes, and you can press the link and see the article on the marketzone.net. And that concludes the little side note I want to mention for moving average. Now back to the analysis. So following its failed breakout attempt of the 50 days moving average and the bearish outside bar pattern that we got here, the price sharply declined from 106 to retest the 100 support zone, a support zone that I was already focused on buying USD/yen at with a potential triple bottom. But I was also monitoring this trend line that also acted as a support line that provided me with additional reason why I wanted to go long USD/yen. Trend line was actually the bottom of a trading channel that I was monitoring. You can see the trading channel here, and it had nice bullish reaction every time that the price tested it. You can see a bounce here, a rally here, another rally, another rally, another bounce, and here the price kind of stalled above it since the second part of last week. So technically it was a support line that I was monitoring, and it provided me with additional reason on top of the weekly downtrend line here, the support zone, and the triple bottom scenario to look for long entries on USD/yen. So if I want to take the last few minutes of this video to summarize this successful trading scenario on USD/yen, we had several components. First of all was the huge psychological zone, the 100 level, which is a reason to buy USD for itself. You know, people can speculate that the 100 support zone will be enough to create some bounce from USD/yen. So that was the first reason, but it wasn't enough for me. The more important reason for me was the broken downtrend line, the weekly chart that we saw. So and the initial reaction that the price showed me when it tested this broken downtrend line that should have acted as support, and that's exactly what it did. And the last reason was this daily trend line that was proven as support for several times, and also proved to be a support zone again when the price tested it last week, and stayed above it throughout this week, and resulted with the 180 pips rally. Obviously, when you're taking such a counter trend trade, you have to take into consideration that the trend can continue and you will be taken out with a loss. USD/yen definitely could have declined below 100 and even retest the broken downtrend line again near 97, below 98. But in terms of risk reward, it was worth it, because all we had to risk was about 150 pips. I'm talking about swing trading opportunity, not some day trading or scalping. 150 pips to risk in order to make 200, because the first target zone was the 50 days moving average near 102, if you can see. The 50 days moving average was proven as resistance line, so I have to consider it as potential target zone. But the next target zones are the top of the trading channel and even maybe the 200 days moving average, which is more of my longer term target zone. So risking 150 to make 200 and even more is a good risk reward for me, especially considering the kind of strength, the technical strength that I had for this potential buy zone. So guys, that sums it up, and I just want to tell you that it isn't some hindsight analysis. Now that I know that USD yen rallied, I can show you technically why it happened. No, this setup was sent and shared with the lead zone as part of our trading plan way before the move happened. We actually had to wait for about 4 or 3 days, agonizing waiting before Yellen's speech, but eventually it paid off. The patient paid off. I didn't include the RSI part in the trading view analysis before, but as you can see, also the RSI showed bullish momentum, which was another reason why I chose to go long USD yen. And all of this was shared with the lead zone members as part of our weekly trading plan. This is the kind of stuff that we are doing each week. I'm teaching the members how to trade, what to look for, and how to analyze. And if you want to be part of it, you can join the Elite Zone members by visiting themarketzone.net, going to the Elite Zone tab and subscribing there for $39 per month. As you can see, just with one trade you can cover all your monthly fee and much more than that. So if you want to join the Elite Zone and learn how to trade like a pro, do so, and I will also add a link in the show notes. Thank you very much for watching this video, and see you in the next video. Bye.